This is Matt from Working Fintech, and in today's Interviews with Leaders in Fintech podcast, we're delighted to be joined by Mike Hudak, and he's connecting the world with instant payments at his latest startup, Sling Money, where he's just come out of a $15 million Series A funding round, which I'm sure we're going to hear all about. And prior to that, Mike has a very impressive set of experiences from being the Chief Product Officer at Monzo, one of the UK's leading fintechs, the Chief Product and Technical Officer at Deliveroo, a Director of Product at Facebook, where he led the ads, products and sharing, and also founded and exited an online video platform called Blip TV, which was acquired by Walt Disney. And Mike is an active angel investor, so giving back into the startup ecosystem. So Mike, thanks for joining us today.
Thanks for having me.
So I guess I'd like to kind of go back to the start and understand, kind of how you got to where you are in some of those journeys. And I think one thing that stood out when I was, looking into some of the companies that you've worked at and so on, is that you actually dropped out of high school and you dropped out of education, right at the start of your career. Can we start off with that? And what were the reasons behind that? And did you feel
I was flunking out?
Back?
I was flunking out. So I didn't like school very much. I probably started skipping class and all of that kind of stuff when I was really young. And I recently got my high school transcripts. I needed to get them for getting my youngest his American passport. And I realized that I guess it was my sophomore year of high school, I got straight Fs. And they were going to make me repeat that year. And I just was like, I don't want to do it. Like, I just think it's a waste of time. I don't like it. And they had sent me to this kind of like child psychologist or psychiatrist to like figure out, they were like, hey, you're smart. Like, what's going on? Like, why is this? And I remember distinctly he had a meeting with my dad and with the school officials in which he said, high school is not for Mike and Mike is not for high school. And he's going to be fine. And you should just let him go. And I was under the legal age to stop attending. And they agreed to kind of like just look the other way for a few months until my 16th birthday or whatever. So that's why I dropped out. And I was going to go to college, actually, was my plan, because everybody told me that I would like college more. And then I got a job offer at a startup as an engineer, and I took that instead because I was like, hey, it seems much better to like earn a salary than try to get a scholarship. I couldn't afford to pay college tuition or anything. It would be better to get a salary than have to pay tuition.
And did you learn coding on the job, or were you geeking out at home on computers anyway?
I was kind of self-taught at home before that. My brother was really into computers, and I had some old kind of discarded computers at home that I learned how to code on badly. I mean, I went to my first job and I had absolutely no idea what to do. I was completely unprepared, and there wasn't, there wasn't that much of an opportunity to learn either. So I just did the best I could.
And so you worked for a couple of years in other companies, and then you decided to take the plunge yourself and create a startup back in the day when video was still quite new. What problem did you think you were solving at that point to make that jump?
Well, I remember, there's like personal motivation, and then there's the world that you're living and all that kind of stuff. So one of the kind of companies I briefly worked at was this company called Pseudo that was broadcasting, I don't know, back in 99 or something like that. Everybody had 28.8 modems and 56K modems at home. And Pseudo was broadcasting like 10 channels of live television on the internet using real video, like real networks, real player and all this stuff. And, you'd watch it at home on your dial-up connection, and the pixels would be so huge. And they had this channel called like 88 Hip Hop and all these kind of like niche things. And it was super cool. It was amazing and way ahead of its time. It like was predicated on this idea that everybody would have like cable modems at home and be able to watch this stuff in high quality. But it showed me the potential of all of this kind of stuff, that media was going to totally change and it was going to be really dramatic. And I got together with a bunch of friends and we decided we really wanted to start a company. We wanted to build something new. And we used to get together at my apartment every Sunday and we would code all day and then play Halo on Xbox in the evening. And we just hacked on stuff. And one day we discovered somebody had uploaded a video to the internet and you could watch it and it was cool. And we said, well, we should just build a thing so that everybody can do this and we should make it really easy. And so that's what we did.
And so you ended up selling that company. Was that kind of planned? Was there like an exit kind of planning at some point, or did that just happen?
I don't know. It happened. I don't think it really worked. I think we didn't really know what we were doing. We were onto something like really cool and really fundamental. And there are all of these like cliches that we learned. I mean, we were super young, and I think there's a Bill Gates quote that like change. Essentially, it's that change is always more profound than you expect, but it takes a little bit longer. So I think that the world that we expected to happen happened a little bit later than we expected, and we made strategic and tactical mistakes along the way that meant that we didn't build the thing that we wanted. It wasn't as big as we wanted. It didn't make money the way that we wanted it to. Bandwidth is expensive and all this stuff. And I think we all learned a lot, but I don't think anybody really made any money. It was kind of like here's a place that this thing can be, that it can live, but it wasn't a huge event.
So going then from this startup where you were fly by the seat of your pants at the beginning and kind of building it as you're going along, then jumping into Facebook, which probably would have been a pretty big company at the time, still only what would have been like 5, 6, 7 years old, but rapidly growing. How was that transition, and why did you decide to go and work at a big corporate? Well, a startup, but bigger, right?
It was a few thousand people. Like at the time, I think the entire product and engineering team fit onto 2 floors of one building. And now I don't know. It's like a friend of mine had been trying to get me there for a long time, and we had made a decision to keep going independently with Blip, but we probably had an opportunity to sell actually, to Facebook, which would have been a great outcome. I ended up going just myself, and it was just like an incredible opportunity. We were all in New York doing this, and we all thought we knew what we were doing. And then I got to the Valley and realized that it was a completely different world, and I got to play for the Yankees, and that was a really incredible experience. And they hired me as a product manager, and I didn't even know what a product manager was. I had zero idea, and I started working on some stuff on an identity team, building new things with an incredible team, and it really felt like I had gone from like this, it's a very American expression, but from like a farm league team, to the Yankees kind of overnight. And I just learned so much so quickly. It was really incredible. And it was felt like a very small company, actually, and a very flat organization, autonomy to make really good decisions. And you measured everything, so you knew whether or not you were right pretty quickly. It was an amazing opportunity and an amazing learning experience.
And so you went from New York over to San Francisco.
Yeah.
And you were there for quite a few years, but then you've kind of, like me as a UK entrepreneur, we're always trying to move from London to the US, and you've actually made the journey the other way. Why was that?
Well, my wife is English, and I met her in New York, and she agreed to move to San Francisco with me. And then I remember very well having this conversation with her, where she was just like, "I don't like it here. It's too far away from home. Everybody does the same thing." We were both at that point working for Facebook. Like, she joined a little bit after I did. And it felt like it was our entire world. And we were taking the bus, up and down every day. I think she wanted to change, wanted to have kids, wanted to be near her parents and all that kind of stuff. And so we decided to move, try it out.
So how long ago was that?
Well, my oldest daughter is 9, and so it was about 9.5 years ago. About 9.5 years ago, maybe a little bit longer.
So as a representative of England, how do you find it so far?
Well, it's a very different place, and I think that one of my kind of like high level views is that the US optimizes for dynamism, and that means that you get like a lot of outcomes which are better and worse. And the UK, I think, optimizes for stability. And both of those choices, have advantages and disadvantages. And when I first got to the UK, I thought, wow, this is like one of the best run places I've ever been. Like when I thought about the way I moved to Hackney in London, in East London. And the government was so well run, like everything just worked. Trash was picked up properly. It was a huge change from San Francisco, which was like a kind of chaotic place with trash on the streets and all sorts of things, and I found it unbelievably impressive. And then Brexit happened, COVID happened, all sorts of things, and I lived through all of those things here. I almost went and worked on some COVID stuff for the government during lockdown and everything. They like appealed to my sense of patriotism in my, second country or whatever, and all of this stuff. And I think that, recently, unfortunately, something has broken in the UK that needs to be fixed. And, part of the problem, I think, is too much optimizing for stability, not enough dynamism. And I think that when that happens, you stifle growth, because growth relies on some amount of dynamism. And unfortunately, when growth goes away, everything fails. So like the train that I take, I live outside of London by about an hour. The train that I take into London now is canceled about, I think it's 16% of the time. It's only on time 60% of the time. And, it's very hard for a country to operate like that. And it really needs to be fixed.
Well, I guess I don't want to jump straight into talking about your latest startup just yet, but talking about the UK, what were you considering then when you're forming a new company? Is that a UK limited company, or have you set it up, outside?
No, it's a US company.
US company.
It's a US company, and we have people in the US, and we have a Dutch subsidiary as well, and so we have people in the Netherlands, and I live here, and a lot of the team lives here, and I really like it. For all of what I just said about the current state of things, I think that the UK has a level of social cohesion and care about community and communal outcomes and all of these things, which is really wonderful. And it's a better place in many ways to bring up children, I think. You don't have to worry about school shootings. Like the food is better. There's so many reasons to be here. And, one of the things that's become very important to me is I really want this place to work better. I want it to be a great place to run a company. I want it to be a great startup scene, and I think that there are so many unbelievably talented people here who are great engineers, great data scientists, great designers, great, everything. And there is actually a lot of entrepreneurial zeal and a lot of, people want to build things. And it feels to me that there's like a 10% adjustment that could be made that will unlock, an incredible amount of growth. And the thing that I really want to do is help encourage that. And, I think that the government now really cares about growth, which is great. I'm not sure that they fully understand startups. And I think that most of the growth here has to come from startups. But I really want that to happen, and I like this place a lot.
Yeah, I mean, there's always been a very good early stage startup scene here because there's some good tax breaks, right? Your SEIS and EIS and the like. And that's really helped foster, the real early stage. But then I think you've always got that problem here when you're getting big enough, there's not enough investors around that have got the big ticket checks of when you're raising hundreds of millions of dollars in a round. There's not many, you know.
I don't know. I think that access to capital is not. I know that that is like a big narrative that people have, and I for me it's a little bit different maybe because I was in California and everything, and all of our investors in Sling at the moment are almost all of them are American firms, and it may be that I have more access to that than the average entrepreneur here. But Sequoia's opened an office. Excel is here. Andreessen. There are wonderful early stage funds and wonderful late stage funds. And if you want to, I was at Deliveroo, we raised hundreds of millions of dollars, from T. Rowe Price and all of these different people. It's true that there's like a really big systemic problem, which is that the UK pension funds don't invest in startups, and the growth, like British growth capital in that way, does not exist. I think that's more of a problem for British retirees than it is for British startups. I think that the problem is probably more one of not having enough people who have done it before, which I think is changing. And I think part of it is just like the government, like not understanding startups and not understanding how to regulate them and how to encourage them and all of that kind of stuff. And thinking about tax breaks and saying, oh, we're done. Or, but the immigration policy is important. All of these things really, 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 but it should work. And I don't think that capital is the biggest problem.
I think the startup machine or startup factory piece it should make it more interesting as we're going forward, because obviously Revolut is doing so well. Klarna is just about to IPO. So there's going to be lots of people, probably similar to yourself, very technically experienced, plus you've got experience of growing a company, who then go out on their own and do stuff. So I guess
the most important thing.
Let's talk about some of those companies then that you've worked for, because Deliveroo and Monzo are both they're in those categories. They're the big leading technology companies in Europe. So when you said you were at Blip, you were kind of figuring it out because you were just young, right? And then you worked in Facebook and you had to kind of, I need to learn product management now. And again, you learned it as you were going along. How did you then take what you learned in those companies then to be a chief product officer in major technology companies?
Yeah, well, I guess, one thing that I think is really important that I feel like not enough people really, I guess, especially considering the audience that we've got here, right? Like, my personal view is that nobody really knows what they're doing, and everybody kind of has to learn as they go. And I suppose if you could choose a job where you have a repetitive motion and you learn how to do the repetitive motion, whether it's like screwing two panels together on a vehicle, or delivering the mail, or every morning being on the BBC and announcing the news or whatever. And you can choose to do that and get real mastery at that thing and do the same thing over and over again. You go through it, this like very clear path of like, I'm going to go through a training period, and then I'm going to do it for a while, and then I'm going to get so good at it that I can do it in my sleep. And I'm just going to do that over and over again. And that's like a very valid life path. And a lot of people do that, and it's great. There's another life path that you can take where you end up in what I call the competency trap, which is that you just continually do things that you need to figure out as you go. And within an organization, within a hierarchical organization, this might mean that you just keep getting promoted as you figure out how to do the previous thing, and like the next thing becomes harder and harder and harder until you just fail. And then, great people, when they fail in that situation, pick themselves up and learn from the experience and go again and keep doing it. And I think that most great things in this world have been achieved by people who are kind of outside of their comfort zone and outside of their depth at any given point. And that doing that takes a lot of ambition and self-confidence and all that kind of stuff. And it is sometimes like deeply, deeply uncomfortable. But the thing that can make you feel better about it, I think, is knowing that everybody else is doing the same thing. I've worked with some amazing people who have accomplished a lot of things, who are household names and, all this stuff. And like, they're all just regular humans who are like figuring shit out as they go. That can be you as easily as it can be them. And honestly, like one of the greatest advantages that you can have in doing that, or one of the most important things in doing that, is the knowledge that everybody else is doing it too. And that it's okay not to know the right answer, but to find it and feel your way through it. And I think that one of the really big mistakes that I made early in my career, and that I hope I don't make anymore, is this belief that I needed to know the answers, or this belief that, that I was like a static person, and that if I didn't know how to do something, or I wasn't good at something, I could never be good at it. And it turns out that's just like not true. You can like kind of learn how to do anything if you work hard enough at it. And lots of people around you will give you advice, and you'll have some things that you've learned how to do that they don't know how to do, and they'll have some things that they've learned how to do that they can teach you to do. And that's a great gift. And that's been really my whole career. And sometimes when I was younger, probably not realizing it, not appreciating it enough. And then the older I get, the more I understand it and realize it and appreciate it.
So persistency and consistency, and just getting out there and bouncing back and learning from your failures.
And being comfortable failing and knowing that that's just like part of life. Yeah, absolutely.
So on the product management side, because you always hear about someone being a product manager is someone who's well versed then to actually run their own company, because you're facing off to so many different areas within a company in a product role. Could you talk just about products and product management? Because I think if you're a student or a graduate, you might not be that aware of product management roles if you're studying a conventional kind of course. It's not something that's really covered. So could you just talk about that?
Yeah, for sure. Well, I mean, I think the role of product management varies a lot from organization to organization. I'll kind of describe it in the kind of classic tech company valley sense, which is, a product will be built by maybe between 7 and 10 people, and maybe 4 or 5 of those people are software engineers. Maybe one of those people is a designer. Maybe one is a data scientist, and maybe one is a product manager. And it's the product manager's job to say, some version of like, this is who we're building this for. This is the problem that we're solving. This is our goal and how we know whether or not we're successful. And then to align everyone around that objective and truly get them excited about it. And if they're not excited about it, figure out why. Build consensus. Be plastic in that description until you've built that consensus. And then help manage and organize the day-to-day work to get there. And that might involve ordering pizzas. It may involve, doling out tasks and keeping track of progress and deadlines. It may involve, talking to marketing people, working on the launch, lawyers. You do kind of like finance. You work with everybody to get this thing ready and launch it and hopefully make it successful. And you are individually probably more responsible for what is built and its success than anybody else. But the best product managers make that a shared responsibility where it's on everybody's shoulders together in the team.
And so is that approach of looking at products, so obviously Facebook is very different to Deliveroo, which is very different to Monzo. Is it kind of you're agnostic really to what the underlying product or service is?
Yeah, for sure. And I actually think that like this kind of product way of working, and there's a lot of elements of this, of like talking to customers, collecting data, a way of organizing a team such that everybody feels like they have some sense of autonomy and agency, so that the decision made by the team is better than if it's like a dictate coming from on top. I actually think that way of working is a technology. Like if you go back, there's a great book written by this guy, Peter Drucker, called The Effective Executive, which is about management in the kind of like early information age, like in the 60s. And it's really striking how he talks about the job of a manager or an executive back then, and describes it, and you realize that he's describing a technology, like a way of working, which is itself a technology. And I think that the kind of like product way of working now that we have is a technology. And I think that you see it, actually in aerospace, where SpaceX works in this new way and Boeing does not. And so Boeing has failed where SpaceX is doing well. And, Monzo and Revolut work in this way, and Barclays is trying to learn how to work, and you can see from their growth numbers the impact of this technology, this way of working. And I think it's almost, but not entirely, universally applicable. And, if you had asked me about this a year or two ago, I would have said it's not applicable in pharmaceuticals. In pharmaceuticals, the correct model is, a bunch of scientists sitting in a quiet room, thinking or whatever. But I actually think it might be pretty much universally applicable now, because I think pharmaceuticals are being changed by modern information technology at such a rate that a product way of thinking and a product way of working is actually superior there too.
So let's talk about Sling.
Yeah.
You've learned a lot over these different experiences that you've had. Can you talk to us about, I suppose, why Sling? What gave you the idea? What was the problem that was really annoying you that you wanted to solve for?
Well, when I was working at Monzo, so Monzo is a neobank in the UK with, I don't know, it's like 13 million customers now, which is a lot in the UK. And we always wanted to expand globally, and I really wanted to expand it globally. And one of the ways that we could have done that, peer-to-peer payments were really the biggest growth driver for the bank, and very powerful and a great experience. And, there was this idea we could maybe expand Monzo globally using peer-to-peer, but there are lots of reasons why we couldn't do it, or it wasn't the right thing to do at that time. And so that's like a little bit of backdrop here, right? And then the other bit of backdrop is that a few years ago, 4 years ago or something, I started getting interested in blockchains, and I didn't understand them. I had bought Bitcoin and stuff back in the day and everything, but I didn't understand blockchains. And I went and I listened. Andreessen Horowitz has this like crypto startup school series, and I listened to all of those walking up and down the beach in Norfolk back in the day. And I read everything that I could, and I started like experimenting and writing code, and I really found religion. I was like, these things are amazing. Excuse me. I like really came to believe in this kind of like distributed computing future. And it seemed obvious to me that this was like a superior technology for a lot of things, not all things. And I actually ended up wanting to start an identity company, because I had worked on identity at Facebook, and there were a lot of things that we wanted to do that we couldn't do because people didn't trust us enough. And one of the really cool things about modern blockchains is you can build like a decentralized identity service where everybody owns their own identity, and they can do selective self-disclosure. They can be completely in control of their data and do zero knowledge proofs. So, they can say, oh, I'm over 18 without revealing anything about themselves. And the recipient of that information can know with certainty that the person on the other side is over 18, but not know their name or anything about them. It's just like cryptographically proven. And I got really excited about this and wanted to start an identity company on top of this technology. And then a friend of mine pinged me and said, I know you're getting interested in this stuff. I'm going to buy some land in Montana, and I'm going to digitize it, and we're going to create a decentralized autonomous organization to own this land. Do you want to participate? And I said, sure. And to do it, I had to send him a few $1,000s of stable coins on a blockchain called Solana. And I live in the UK, and he lives in San Francisco. And I did it, and the transaction was instant and free. And, everything else about that transaction really sucked, like the know your customer process, buying the actual stable coin, the UI of all of the tools that I used was not very good. It really felt like I was like using an old Linux computer back in the day, or like, typing on a terminal in this like very geeky way. But the fundamental thing is that the money moved instantly and for free from London to the UK. And like normally that takes a few days and costs a ton of money. And I said to him, I was like, we should just start a global Venmo. We should just build global instant peer-to-peer payments on top of this technology. And he had actually written the first check into Venmo as an angel investor. And he was like, "Oh, why are you the money now?" And I was like, "Wait, don't do it yet. Let me do some work first." And I spent the next 6 months with my co-founder, Simon, talking to everyone, talking to early Cash App people, PayPal people, Venmo people, Wise people, to try to understand why nobody was doing this. And at the end of 6 months of doing that, I just couldn't figure it out because it seemed like this was an obviously superior technology, a better way of doing things. Difficult for sure to like build a consumer product and all those things, but so clearly better. And this was now probably like 2.5 years ago. Crypto was not a popular thing at the time. Blockchains were not a popular thing. The governments didn't like them. People thought they were gambling. It was a bad brand. But the way that works is there's this thing called the Gartner hype cycle. And it was just like, it's a very normal thing. Like people get very excited about a technology and then they get very disappointed by it because things don't happen fast enough. It was like online video back in the day. And, when you've seen that pattern enough, you know that it's going to come back up again. And we just said, the world would be a better place if you could if everybody in the world could send money to anyone else in the world instantly and basically for free. Like that is an incredible thing where, you realize, you take a step back and you say, well, we've connected the entire world with media. I can send photos or text or video to anyone in the world instantly and for free, and it's changed the world for better and worse, but like ultimately I think for better. And you start asking yourself, why haven't we done that with money? And there's no good reason. There's no good reason. And the technology to do it exists now. And I think that when you see that and you see the size of the change that can be made, and it feels like, at that point it felt like almost like a secret. You can't not do it, And so it's just really clear that we had to do it. So we raised $5 million and got to work. And it's 2.5 years later now, and we're 23 people. We've built a product that works. You can download it now from the App Store. It's called Sling Money, and you can send money instantly from any. We have 76 countries with instant payment connections. So the other day, this was a really amazing thing. That one of our users tweeted that he was just like, Sling is so cool. It works everywhere in the world. You can buy somebody in Kenya a beer with it. And this guy in Nairobi, who is also a Sling user, replied to his tweet and said, buy me a beer. And the guy in Amsterdam did it. He sent him shillings from Amsterdam. And the guy in Nairobi replied and said, I've got it. I got my beer. And the guy in Amsterdam replies and says, send proof of beer. And so the last post in this thread is a photo of a Guinness in Nairobi. And the guy in Kenya was like, that took 60 seconds, from like that tweet to having a beer paid for in Nairobi. That is like magic, and of course it should work that way. How could it not work that way once you see that that's possible? So it's been a real joy to build,
Yeah, that must have been great hearing that story.
Great.
Probably going back to what we were talking about at the start about the UK focusing on stability. Yeah, there's a lot of regulation in Western countries, in particular, and everywhere really. Is that kind of a hindrance to your kind of go-to-market strategy?
Well, one of the things that we realized really early on was that one of the reasons why people hadn't built this yet is because anti-money laundering and counter-terrorist financing and sanctions enforcement in a blockchain environment is hard, or at least novel and different, and people hadn't really figured out how to do it well. And we actually saw that as like one of the first problems that we needed to solve. And so we hired some really amazing consultants to help us write our first financial crime policy and procedures to figure out, from first principles, how we were going to do this properly. And we put a tremendous amount of work into that policy, that set of procedures, into a ton of software for performing KYC and transaction monitoring and SAR filing and all this stuff that I only knew how to do because I learned it on the job at Monzo. And I realized how deeply important it was. And I think that experience and that knowledge has been tremendously helpful for us because we've been able to invest in the things that governments care about and society cares about when it comes to technologies like this, and legitimately so. And I think that made all of the conversations with regulators, much easier because we could really prove that we were coming at this from a mature, responsible place where we were truly trying to do the right thing. And I think that when you're operating in a space like this, that is just extraordinarily important.
So, just kind of looking at some of the things you said with setting up Sling, obviously regulation, anti-money laundering, all of that side is super important. That needs to be solved, which looks like you've done. And I suppose ongoing.
It's an ongoing. I was going to say it's a forever
not
project.
Done.
Yeah. No such thing as solved.
Yeah, and another part is abstracting away the complexity of everything that's on chain, because the UI UX is much better now than it was a few years ago. It was horrific, before, but that side of it you've looked at. And then the third part, can you talk about the stablecoin part of what's going on?
Yeah. So
if there's any other parts as well,
Yeah, for sure. Well, the way that Sling works is that we combine a self-custodial Solana wallet, which sounds like a lot of jargon and a very complex thing, but we do it, as you say, packaged in a consumer product that feels like you're using Facebook or Venmo or WhatsApp or Monzo or whatever. It just feels like a normal product. You don't have to look at wallet addresses or know what a key is or anything like that. We've made it very easy. And then we combine real-time payment networks, which are mostly new around the world, with a stable coin so that transactions are instant and inexpensive. And so the way that it works is like if you're in Amsterdam and you're buying, what you do is you buy a stable coin, and you can do that with a debit card transaction or an open banking transaction, like an instant open banking transaction. And then you get the stable coin on your wallet in Solana. And all Solana transactions are basically instant. They take a second. They cost like a 20th of a penny, a 10th of a penny. And so then you can send the stablecoin to anyone else really in the world. In total, really, we support 145 countries. About 76 of them, you can take the money out instantly with a real-time payment network. In another 75, you can do it with a crypto exchange. So that's a less user-friendly way of doing it. But you can send it to basically anyone. And that transaction is basically instant. And then if you're buying somebody a beer in Kenya, they can get the money out into their M-Pesa in Kenyan shillings basically instantly. So the entire time, the user experience time from the first tap in Amsterdam to the last tap in Nairobi to get that money into M-Pesa, under a minute. As a result of the way that all of this works. And through that entire process, we're doing our transaction monitoring, we're doing our KYC, we're doing all of the compliance activities. And the value is moving in a stable coin, which is a token on a blockchain, which is backed one-to-one by money which is held with a regulated custodian, a stablecoin maker. And in our case, we use a stablecoin made by this company called Paxos, which is a trust company in New York that's regulated by NYDFS, the New York Department of Financial Services, which is one of the toughest regulators in the world, which I think is important. Same reason why we picked the Dutch actually as our regulators in Europe, because they're strict and well respected. And so the token represents that money which Paxos is holding, and can move on the blockchain basically instantly, a lot faster than traditional fiat money can move, because traditional fiat money, if this makes sense, the money in your bank is held in a database maintained by your bank. And then the other person's bank has its own database, which is built using probably totally different technology. And they're not compatible. And we use kind of weird email-like messaging systems for moving one database entry in one bank to another. And maybe domestically, in the UK, that's done with something called faster payments, which, might take up to 5 minutes or something. Internationally, that's basically done by email. And it can take days. And sometimes it has to go through multiple banks with multiple incompatible databases. But what a blockchain and a stablecoin does is it introduces compatibility across the entire stack globally. where it's one shared database that everybody can access. And that's one of the things that makes it so much better and so much faster.
Two technical questions. One, on the stablecoin piece, so someone like Tether owns and has to hold a large amount of money market funds and short-term treasuries and so on. Do you have to do something similar with stablecoins? And the second question is on the, essentially with your stablecoin, Paxos then, so you're just replicating whatever the dollar is versus the currency exchange rate when someone's taking the money out. Is that right?
Yeah, that's right. So in terms of the prudential aspect, like the holding of the money backing the stablecoin, we really prefer to work with prudentially regulated stablecoins where there's a regulator like NYDFS, which is making sure that like every dollar is accounted for like you would with a bank. And, Paxos is a trust company, and that's the way that they're regulated. And I think that's very important. And, NYDFS will have standards for how much of that has to be in cash, how much has to be in treasuries, where they can be held, and all that kind of stuff. And that I think is extraordinarily important. And the quality of a stable, there's varying degrees of quality of stablecoins out there. And, using a good one is very important. And this is, I think, an area where regulators are going to get better and better at, saying, well, like the European Union now has like pretty comprehensive stablecoin regulation, which I think is a great thing. And, some stablecoins are going to be legal in Europe and some aren't, based in part on, their prudential quality, the quality of their reserves. In terms of the foreign exchange, that's exactly how it works. So we do real-time FX against the dollar. Everything moves in a dollar-linked stablecoin right now. And so if you want to send 200 shillings and you're in Amsterdam, we figure out how many US dollars that is at this moment and how many euros that is at this moment. And then we pull the right amount of euros from your account, turn it into the right number of dollars. The right number of dollars basically move to the person in Nairobi, who then can get the right number of shillings for it. And it turns out that, in M-Pesa, and it turns out actually that all of the most liquid foreign exchange markets in the world are against the dollar. And it's the best pair for everything. And so it's like a very nice, very efficient, very good way of doing it. But we will introduce other stablecoins. So we'll have a euro stablecoin, we'll have a Canadian dollar stablecoin, because I think that if people store money in the wallet, they want to do it in the currency that they live in. And I think that's very important.
And so does Sling make money through a commission or the FX spread, or how does Sling get paid?
Well, so we think that there's like a 10% chance that we can build Sling in a way that we can offer these kind of instant transfers all over the world for free for a long time, free to the user, as they say at the NHS, free at the point of service. And there are three revenue streams that we believe may allow us to do that. One is we do make like a revenue share from the stablecoin maker, because the stablecoin maker, has dollars, which is backing that stablecoin, which is making interest or, yield from treasury bills or whatever. And so they share a little bit of that with us as a distribution, like revenue share. And then we're going to add a debit card. And so we'll make money from debit card interchange. And then, the mid-market rate, the foreign exchange rate that you see when you go to Google or whatever, it's called the mid-market rate. And of course, there's trading that happens to the right of the mid-market rate. So, sometimes if you go to like an airport currency exchange, or, you use PayPal for an international transfer, they charge you 2 or 3% more than the middle rate. And, of course, if you're moving in bulk and have the right things set up in the right counterparties, you can get rates to the left of the mid-market rate. And so we believe that at scale, we can offer people the mid-market rate, which, feels free, but we were able to source those shillings because of scale, at a lower price. And so those are three revenue streams that, if everything works perfectly, would allow us to offer these payments for free. I don't know whether or not that'll be the case yet. Like, we need to watch consumer behavior. We have to see if people hold balances. We have to see when we ship the debit card whether or not people use it. We have to see if we really can get that FX spread. If we can't, one of the really cool things about building this on top of a blockchain is not only do you get better speed and all of the other benefits that we talked about, it's also in many ways a lot easier to build with fewer people. So we're only 20 people and we built this kind of global product. And so we have much lower costs to cover than a more traditional money transfer company. And so we believe that even if all of those variables don't line up, we can still offer all of these services at, half the price of everybody else, or maybe less.
Interesting. So in terms of the skill set that you've learned along the way, it kind of sounds like that it's very much learned by doing. And
yeah.
And then if you win or not win, you're learning from both. And it also sounds like timing has been an interesting kind of
Very
element
important
to what you've been doing, because with Blip, it was probably a little bit too early, but you had the right idea. And whereas what you're doing now, you've kind of embraced blockchain, probably but only quite recently, but actually spotting something where no one's addressing this market yet. So like you say, if you can keep yourself very lean, you've got enough money in the bank that you can afford just to be at the right place at the right time when everyone starts adopting it, right?
Yeah, and I think we picked the right time to build a stablecoin company, which was really nice. And I think, with Blip, we were both early and just made mistakes. We weren't responsive enough to user needs. We didn't watch what everyone else was doing and figure out what we should do. So many things that you learn as you go and learn as you build. And I think, I remember sitting. I was on the last row of a Delta plane flying cross country once in the U.S. And I sat next to this really lovely lady who it turned out was a poet laureate of the United States, and we talked for the entire flight. And we told each other, she used to be a teacher in New Hampshire, I think, before she became a full-time poet. And, we were talking about dropping out of high school and all this kind of stuff. And she was like, oh, you're an autodidact. I didn't even really know what that was. It just means you're self-taught, And I think that one of the real gifts in life is being open to just like learning all those lessons and reflecting on those things, and not feeling bad about having made mistakes. And I mean, I've spent plenty of time beating myself up for having made mistakes too, don't get me wrong, but I've learned that that's actually the only way that you learn. And you have to approach things and say, well, I'll just figure this out, and if I'm wrong, I'll go again, And I just think that's incredibly important. And then timing, yes, is also very important. And it's so easy to be too early or too late. And that's something that you just get a feel for, as you do stuff.
So there's lots of people listening to this that they're at the start of their career, or maybe just about to embark on their career. And you yourself have got some young kids. What advice can you give to people about the future and kind of looking forward?
I mean, I think that we live right now at one of the most exciting times in human history. We are at a point of like massive technologically driven change in everything, in medicine, in, we are on the verge of curing cancer. We are, about to go, about to go to Mars. We are about to make, global instant payments, instant and free. All of these things are happening at the same time. Artificial intelligence, quantum computing. We are living through like an incredible golden age, and unfortunately, technological golden ages and times of change like these also come with massive amounts of political upheaval and trains that don't run on time, and, polarized politics that are deeply uncomfortable. And I think historically that is, so far those things have been inseparable. When the book was invented, when the movable type was invented, I mean, we just got an unbelievable period of political upheaval. That's just the way it is. But if you're young and going into your career now, this is like one of the coolest times to be doing that. And I would say just, seek novelty, seek new things. Don't go to work at Goldman Sachs as an analyst doing the same shit that everybody else is doing and everybody has been doing for the last 60 years. That job probably won't exist. By the time you're 40 or whatever, that job will not be there anymore, or it'll be like unrecognizable. You should go into like the development of, medicine with artificial intelligence, or ways to drive better financial outcomes for people using more modern technologies and CBDCs and all these things that like you look at today and you're like, they don't exist. They will, and they'll probably take less. They'll probably happen a little bit slower than you expect. But the magnitude of the change will be much greater than you expect. And you should embrace that and get as much experience with new things and novelty now, so that when you're in the prime of your career, when you're in your 30s or your 40s, you have been working with those things for your entire professional life. And you will thank yourself for doing that. Take a little risk, do new things, go to work at startups, go beyond your level of comfort, out of your depth, and learn and be comfortable with failure. And you will do well.
Great advice. So Sling Money, people can download it on whatever app store.
Yeah.
How can people follow you? Are you active on any particular platform?
I tweet a lot. I still call it Twitter. I'm on twitter.com/mhudack, MHUDACK. And I've got Hudack.com, HUDACK.com, which has links to a bunch of stuff, and Sling.money.
Well, Mike, thanks for joining us today.
Thanks for having me, Matt. Really appreciate it.